You wake up Monday morning. You go to work. You work hard. At the end of the month, a number appears in your bank account. And it is not the number you earn. It is smaller, noticeably smaller, uncomfortably smaller. You don't remember agreeing to this. You don't remember signing anything. But somewhere between you doing the work and you receiving the money, a significant chunk of it quietly changed hands. In the United States, the average worker loses roughly 30% of their income to federal, state, and local taxes combined. Add payroll tax, sales tax, property tax, and a dozen smaller levies, and for many middle-class households, the effective rate climbs closer to 40%. That means 4 months of every year you work for free. Not for yourself, not for your family, for a system you were born into and never voted on. Now, that money goes somewhere. It funds things. Some of those things are genuinely valuable. But the question most people never ask is not where does the money go? The question is, why does it cost this much, and who decided? Here is something that should make you mildly uncomfortable. The United States federal income tax did not exist until 1913. For most of American history, the government funded itself through tariffs, taxes on imported goods, and excise taxes on things like alcohol and tobacco. Then Congress passed the 16th Amendment, and the income tax was born. The initial rate was 1% on income above $3,000, 3% on the very wealthy. Within 5 years, the top rate had climbed to 77% to fund World War I. It came down after the war, then went back up during the Depression, then hit 94% during World War II. 94%. The point is not that taxes are inherently good or bad. The point is that the system you were handed, the one that takes a third of what you earn before you can touch it, is not a law of nature. It's a series of political decisions made over more than a century, layered on top of each other like sediment. And most people have no idea what those decisions were or why. Let's start at the beginning. The paycheck. Your employer agrees to pay you, say, $60,000 a year, but you never see $60,000. Before that money reaches your account, the federal government takes a cut through income tax. The amount depends on your bracket. Then it takes another 6.2% for Social Security and 1.45% for Medicare. That's FICA, the Federal Insurance Contributions Act. Your employer also pays an additional 7.65% in matching FICA contributions on your behalf, money that could theoretically have been part of your salary, but instead flows directly to the government without ever appearing on your pay stub. So right at the source, before you have made a single decision about how to spend your money, roughly a quarter of it is already gone. Now you take what's left and try to live. You rent an apartment. That building's owner pays property tax, which is baked into your rent. You're paying it. You just don't see it as a line item. You buy groceries. Depending on your state, there may be sales tax on certain items. You fill up your car. Federal and state gas taxes are embedded in the price per gallon. You go out to eat. Sales tax. You buy new shoes. Sales tax. You pay your phone bill, a collection of local, state, and federal fees that can add 15 to 20% on top of the advertised price. If you manage to save some money and invest it, capital gains taxes apply when you sell. If you own a home and the value increases, property taxes rise with it. If you die and leave money to your children, there's the estate tax, a levy on wealth that has already been taxed at least once. The tax code in the United States is roughly 4 million words long. For context, the entire works of Shakespeare are about 900,000 words. This is not an accident. Complexity is not a byproduct of the tax system. In many ways, it is the product. Let's do some math that the government would prefer you didn't do. The U.S. federal government collected about $4.4 trillion in revenue in 2023. It spent about $6.1 trillion. The difference, $1.7 trillion, was borrowed, added to the national debt, which now stands at over $34 trillion. That number is so large it has become functionally meaningless to most people. So here's a different way to think about it. The U.S. federal government pays roughly $800 billion a year just in interest on that debt. That is more than the entire defense budget, more than Medicaid, more than all discretionary spending combined. Interest, not programs, not services, just the cost of having borrowed so much for so long. And here is where the math becomes genuinely uncomfortable. That debt does not disappear. It accumulates. Future taxpayers, people who are in school right now, children who haven't been born yet, will be responsible for paying it back or paying the interest on it indefinitely. Your taxes are high partly because the government spends more than it collects, and it has been doing that, with brief exceptions, for most of the past 50 years. The last time the U.S. federal budget had a sustained surplus was during the Clinton administration. That was over 20 years ago. Since then, through 2 wars, a financial crisis, a pandemic, and several rounds of tax cuts and stimulus spending, the debt has grown from roughly $6 trillion to $34 trillion. Taxes are the price of that history. Now, here is where it gets interesting, because both sides of the political debate will tell you they have the answer, and both are leaving something out. One side says taxes are too high, cut them, let people keep more of what they earn, shrink the government. This sounds appealing, and it also raises a question. Which part of the government would you like to shrink? Because roughly 62% of federal spending is mandatory. Social Security, Medicare, Medicaid, and interest on the debt. None of that can be cut by Congress in a normal budget process. It's locked in by existing law. The other side says taxes on the wealthy are too low. Raise them. Make corporations pay their fair share. This also sounds appealing, and there is real evidence that tax avoidance by corporations and high earners costs the government hundreds of billions a year. But even if you collected every dollar that slips through the cracks, it would not close a $1.7 trillion annual deficit. The honest answer, the answer you almost never hear from a politician, is that the math does not work at the current level of commitments. Either taxes have to go up, or spending has to come down, or both, or the debt continues to grow until it becomes a crisis rather than a slow emergency. That's not a political opinion, that is arithmetic. Zoom out a little further and the picture becomes stranger still. The United States is not the highest taxed country in the developed world, not even close. In Denmark, the top income tax rate is around 55%. In France, 45%. In Germany, 47.5%. But those countries also provide universal health care, heavily subsidized child care, free university education, and robust unemployment systems. Americans pay taxes that are high enough to feel painful, but not consistently high enough or spent consistently enough to cover those benefits. Americans pay more per person on health care than any country on earth, and yet Americans still pay out of pocket for insurance, deductibles, and prescriptions. Americans pay more in education-related costs than most developed nations, despite public schools being theoretically free. The average American gets a version of the cost, but not consistently getting the full version of the service. Part of the reason is inefficiency. Part is the complexity of a federal system where money passes through multiple layers of government before it reaches anyone. And part, a significant part, is that the people who write tax law are also the people most affected by it. The tax code is 4 million words long, not because the economy is complicated, but because every one of those words represents a negotiation, a loophole won, a carve-out preserved, a rate protected. The complexity is not neutral. It disproportionately benefits people who can afford accountants, lawyers, and lobbyists, and it disproportionately burdens people who cannot. So why are your taxes so high? Because the government makes commitments to the elderly, to the sick, to national defense, to interest payments on a century of borrowing that cost more than it collects. Because the system was built over 100 years, one compromise at a time, and it shows. Because every attempt to simplify it runs into the people whose wealth depends on the complexity staying exactly as it is. And because the political cost of telling voters the truth, that the numbers do not add up and that someone is going to have to pay, is higher than most elected officials are willing to bear. Here is the question that nobody in Washington seems to want to answer directly. If Americans knew exactly where every dollar of their tax money went, every contract, every subsidy, every interest payment, every program, would they agree it was worth it? Maybe they would. Maybe the answer is yes. Maybe the roads, the military, the safety net, the research, the infrastructure, maybe all of it adds up to a reasonable deal. Or maybe they would look at $800 billion a year spent on interest alone and ask why a country this wealthy has been living beyond its means for this long. That question has an answer. The answer is just uncomfortable.